Why your Credit Karma score can be 20 to 60 points higher than your actual mortgage score. I got to tell you, this question comes up all the time. Hey, I was looking at my free Credit Karma or my free Karma report or my Capital One. I have clients literally right now. One of them has a 610 credit score. And she texted me the other day and just said, "Hey, I think my score's gone up to 700." And I said, "Where did you get the report from?" And of course, it's freecreditreport.com or Credit Karma. And what's interesting is when we review the mortgage report, it's actually the same or slightly worse. And one of the things I wanted to do today was just provide a resource to our agent partners and to clients about why there's a big variance or difference and what's the impact of it. So, hey, let me throw this out there. If you'll send me an email, Steve at Steve Kyles, Kyles, Steve at Steve Kyles, first and last name. So Steve Kyles, Kyles.com. Just say credit, just call it Credit Karma homebuyer report, like Credit Karma report in the subject line, and I'll send you. We put together a multi-page document that'll really go into great detail about credit. So send me an email, put in there, send me the free credit report information about Credit Karma, and I'll send it right over to you. So all right. Hey, so why did the scores not match? I'm going to go through why the scores don't match, why the difference matters, what to expect when your lender pulls credit, how to improve your mortgage score. And I'm going to kind of bring it all together for you at the end of this quick podcast, probably 10, 12 minutes. And you'll feel like you're a credit expert and at least know more than most people in the marketplace about credit and why there tends to be a variance. So let's dive in. The two things, so let's start with this. Why is your Credit Karma score higher than the one your lender uses? And Credit Karma uses something called a Vantage score. And it's a model that was created by Experian, Equifax, and TransUnion to help consumers monitor credit, not qualify for loans. And so what the three credit bureaus did was they came together to put together a scoring model that allows a consumer really to monitor their credit. Am I making progress? Is my credit getting better? Is it getting worse? But it is not the model used to determine eligibility for qualifying for loans. And so I'll tell you why. The Vantage score, it tends to update more often and it's more forgiving. And so what it'll do is it'll overlook things like small delinquencies or give you more of a positive impact for credit that is newer and it doesn't have what's called seasoning. So you might open up a credit card, have it for 90 days. Well, the Vantage score is going to give you more positive feedback on that, whereas a FICO, which is the scoring model that was literally created to determine qualification for automobile loans, mortgage loans, and it's more of a qualifying model, says, hey, look, if you open up a new trade line, we're not giving you a lot of credit for that. We're only going to give it to you if you've made 12 to 24 months of on-time pay history. So the Vantage model is more lenient. And the FICO model is really designed to predict a borrower's ability to repay debts and loans. And so that, I mean, if you were to say, what is it? Well, at the core, that's really the two things is that it's two different models. Most people don't know that. It's a Vantage score and it's a FICO score. And so when you see that 740 on a Credit Karma, and then you go for an automobile or you talk to a lender and the lender says, hey, you're tri-merged, which by the way is TransUnion, Equifax, and Experian. They always look at the middle of three. So you might have a 710, a 700, and a 680. Your mid score would be a 700. And that's why you would see it different than if you had just gotten a free credit report from Credit Karma, Capital One, American Express, all of the services, so many entities say, hey, you want to check your credit? And we'll give you your credit report. That's a Vantage, not FICO. And here's why the difference matters. And I think this is so important. The gold standard in credit, you talk to clients, they're like, oh man, I got great credit. I got a 740 or better credit score. Well, 740 used to be the gold standard. If you had a 740 or better credit score, you were in the best classification there was. And over the last several years, that's changed to where now that number is 780. So you literally could have a 779 and your interest rate be an eighth higher than if you had a 782. And so, what people don't realize is 1 or 2 points matter. And especially if you're talking about my credit karma came in at 760, and then my actual FICO score is a 710, I'll tell you what, that'll make about 0.375 to a 0.5% difference in rate. So, it's important. I always encourage people this: the Vantage score is good just to see the direction of your credit. But when you're considering purchasing a house in the next 3, 6, 9, 12 months, I am a huge proponent of get pre-approved, get pre-qualified early so that if there's things you can do right now to improve your credit score, it may make a huge impact. Because I'll tell you this, 1/4%, a 0.5% difference in rate on a $400,000 loan literally could save you 100, 150, $200 a month over the life of that loan, and it simply adds up. And so that's why we're looking at the tri-merged credit report, because we want to look at where you at on all three scores and what's your mid score. And then if we've got time, is there something we can do to keep elevating the credit score so that you get the best financing available in the market? So one of the things when you're looking at qualifying, there's a handful of things you can do. And so let me just talk about some things you can do to improve your credit scores. Number one, and everybody knows this, here's 5 quick wins you can have right now on credit. Just make sure you're paying on time. Payment history makes up 35% of your credit score. Even one late payment hurts you. So my encouragement is, and I know we really highly recommend, set everything up on auto pay. That way it's automatic. You don't even think about it. I was working with a client just a few months ago, and this client had several $1,000,000 in the bank. They literally had just a handful of revolving accounts just to keep credit. One of them was, I mean, I want to say, my gosh, it was like a couple of $100 credit card, and that stinking thing had a late pay on it. And he just said, you know what? I forgot the bill. And clearly, he has almost no debt. Any debt he has is strategic, less than a few $100, got $1,000,000 more in assets and in the bank. And he simply had an oversight. Well, the problem was that took his 800 down to about a 710, 715 in that low 7 range. And it was a big impact to interest rate. And so my encouragement is, number one, make sure you pay things on time, pay them on auto pay. Number two, reduce your revolving balances. Keep your credit card usage under 30% of your available limit. So let me give you an example. You want to keep revolving accounts. Like if you have nothing that you're paying on each and every month and there's nothing to be able to show on-time consistent pay history, that's going to hurt your score as well. So you need credit, you need things that you're paying on. But if you got $1,000 credit card, just keep it under 30%. Make sure your balance stays under 300 on a $1,000 credit card. That's going to put you in one of the best classifications. Here's another one. Don't open or close accounts. Oftentimes somebody will go pay off a balance, they close the account. That actually adversely impacts you, because what credit is doing is saying, look, you got a $10,000 credit card. You're not fully maxed out. You've actually got zero balance on it. But if you close it out, it hurts you rather than just leaving it open with a zero balance. Or every few months, pay a couple things on it and then pay it off. But don't open or close accounts. It'll hurt your credit score. Also, check your report for errors. I think it's great when you're looking at, you can go to annualcreditreport.com. It's free, annualcreditreport.com. You can grab a free report, check it for errors. And you'll be able to look at, are there errors? Are there old addresses? Are there wrong addresses? Are there aliases on my credit? Is there information that needs to come off that's not accurate? Clean it up, because that'll affect your credit scores. And also, one of the things we do on our side, we use simulation tools. So when we review credit through the pre-approval process, we can actually do a if this, then that type of scenario, and let's say that you're at a 680 and we need to be above, the 720 in order to maximize where you're at in a mortgage, we can literally say, what if we pay this off? What if we do this? What if we do this? What if we do this? And it's a if this then that scenario. So we can even run simulation tools to be able to help see how to maximize your credit. So, hey, the bottom line is this: Credit Karma, other free apps are great for education, but they're not for mortgages. Your true FICO mortgage score is what determines your approval, your program, and your rate. So that's why we say we want to build your clear mortgage plan with clarity, not chaos. And so what I want to encourage you, look, if you're looking to consider making a purchase, or if you're one of our agent partners and you've got a client who needs to better understand credit, forward this over to them. Look, we'd love to help you through the home buying process. We'd love to help you get in and make it just a great overall experience and provide great feedback. You can always text me, call me, 281-701-4521. And then also, if you want the free credit resource, you can text me, the 281-701-4521, or you can send an email to steve@stevekiles.com and just say Credit Karma resource, and I'll send it to you. So, listen, would love the opportunity to continue to help you and your clients. Our goal is to be a resource for you in the space that we both serve. So always appreciate you spending a few minutes with me. And until the next podcast, we'll see you soon. See you.